interesting day on the company news front. Clover's buyout by Israel's Milco is being opposed by unions, and while some banks are retrenching, one bank is backing the trend and hiring. Joining me now to talk about this is Wayne McCurry from F&B Wealth Investments. Wayne, many thanks for your time this evening. And I suppose we could start with that particular story there about Clover. I think it was a done deal for us because the competition tribunal had approved the sale, but now the union's saying that this is going to cause job losses, something which we shouldn't be surprised.
Probably will.
Yeah, but I mean, they'd mentioned about 277 jobs going to be lost as a result of the transaction.
Look, I'm not too sure how many jobs are going to be resolved, but Clover has been operating in a very tough environment, subject to milk solid imports from New Zealand and all over the world. And quite frankly, they have to right-size the business, otherwise every job's going to get lost because the company will close down. So this is literally the last chance for Clover. So if they don't take this buyout, I doubt if they could survive as a company without this buyout. So, you know, maybe a retrenchment, a limited retrenchment is better than the whole company closing.
Right, and I mean, another concern that's been raised by the unions is the fact that local suppliers may suffer as a result of the transaction. I mean, how much of that is going to be a factor when the transaction goes through?
Look, we'll have to see. I mean, they're not the only player in the milk industry, obviously. There are other players. But unfortunately, and we might need an element of tariff protection, there might be an element of dumping, but milk solids, not the actual stuff in your fridge, it's the solids that are being imported that's actually causing havoc, because you can mix it with water and you've got milk, and it's becoming insignificantly cheaper than what the local suppliers can actually produce it at.
Let's talk about another company, Acap results out today. Very solid set of results. And of course, as I mentioned a little bit earlier, they're backing the trend. They're set to hire about 600 people. And this is because their digital offering is growing as well as their client base.
Yeah. Look, I mean, they've done very, very well over the years. Earnings up 18 or 20% depending on which one you look at, which is exceptionally good given the environment. I mean, the other banks, the earnings are up 4, 5, 6, 7%. So they certainly are growing, and they're growing the customer base. They're trying to go more into the higher LSM markets because there's obviously some money to be made there as well. And they are hiring because they're expanding, and they're expanding rapidly. But they will also at some stage hit the end of their expansion. And it's very unfortunate, but digital banking is what's happening throughout the world, not just here, and this does over time imply fewer jobs.
Yeah, and I mean, let's stay with the digital banking and really what's happening within the industry. We've averted the strike that was set to shut down the industry tomorrow, but the unions are appealing, and it looks like they may be able to secure a permit for the coming months to strike.
Yes, and obviously unions have the right to strike, and it's a union's job to preserve jobs and to look after jobs. But this is a trend that's not going to be stopped by a strike. This is an ongoing trend, and it's not just in banking. It's throughout the whole of retail. I mean, if you look at what's happening in the UK now and how online sales are affecting physical stores, it's just a question of time before that happens here. So our big shopping centres, the big box shops within those centres are all going to shrink over time. A lot more is going to go online, and unfortunately that will also mean job losses. It creates opportunities obviously on online and digital marketing, etc., but the physical salesperson in the shop at the shopping centre or the bank teller, it's a declining part of the market. Now it's quite interesting, the banks will probably not cut their number of branches massively, but they'll cut the size of the branch quite massively, and they will essentially become marketing outlets and not admin outlets as they are now.
That's right. When the CEO of Capitec did mention with their funeral policy, and so that they're offering that it's going to be a marketing platform and not so much as you've just mentioned there. And then a final thought from you. We're always hearing this about the trade war. Yes. One day we've got progress in the negotiations, the next day we go backwards. Just the impact of this yo-yoing between the two for emerging markets like South Africa.
It's massive. We are unfortunately get whiplashed by these trade talks. Now, I personally think that Donald Trump will settle, because although trade wars might hurt China, it will hurt America as well. Maybe to a lesser extent, but it will hurt America, and no politician is going to do that the year before an election. So I think it will settle, but unfortunately with President Trump is One day he's blowing hot, next day he's blowing cold in it. I mean, he gave a scathing, almost a teardown of China at the UN a couple of days ago, saying essentially they're thieves and liars. So you just don't know what's coming next, but we will find out what happens. They've already started the preliminary talks. The main talks start next week, and I think he will settle because it suits him politically. And of course, now he's fighting the big battle in Congress, and I don't think he wants this trade war as another battle that he's actually fighting.
That's right, Wayne. Many thanks for your insights this evening. I've been speaking to Wayne McCurry from FNB Wealth and Investments.